Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's February 14th, or 12th, excuse me. Can't jump ahead there. I hope you guys are having a great day so far. We do got a couple economic data points on the calendar, and we'll start with the NFIB Small Business Index for the month of January. So on this index, it's basically an index that measures the confidence level for small businesses. And this is important primarily because small businesses do make up the bulk of the employment out there for jobs out there in the U.S. here. And in December, as you can see here, we were at 104.4, and it dropped pretty substantial down to 101.2. This is the lowest reading we've seen since around November 2016, I believe. And this had part of it was, the number one thing we've been kind of hearing all along for them, their biggest complaint was trying to find qualified applicants for their job openings. That's been the number one. But the added one was they did have a change of sentiment with this whole thing with the government shutdown. Did kind of sour their mood a little bit. And it's something we're going to probably want to watch to see if this goes back upwards. If we get an agreement in place, which we'll touch on here in a moment, if that will help improve their mood and hopefully see that rise up again. Last but not least, we're seeing job openings improve. So for the month of December, so in November it was at 7.2 million, and it jumped up to 7.3 million. So good numbers right there. Seeing some improvement in jobs. Stock market's up. Actually, the Dow is up over 200 so far today, and the big news today is sounds like there's a tentative deal struck between both parties on the border security. So it sounds like Republicans and Democrats both got together and were able to come up with a tentative agreement. Now we don't know if it's something that President Trump will approve, but it sounds like on congressional level, it sounds like something was agreed between both parties, and that's why they call it tentative. Also, investors are getting some optimism on the trade talks progressing between U.S. and China. We do have some upper level people like Steve Mnuchin coming in and Lighthizer coming in on Thursday to enter a higher level of talks. So we'll see if we get, probably towards the end of the week, we'll get see if there's any progress made, see if we're still far apart, as they say, or if we've closed that gap a little bit here. We do got, again, all week pretty much, but today's no exception. We do got several Fed members speaking today. So anything that goes maybe more, if it's less than dovish, it could maybe disrupt the market, especially if it's a voting member of the FOMC. So just be prepared for any volatility if there's any bullish, or I'm not bullish, but any hawkish stance that any of them might play. But lately it seems like their tune have changed to more of a dovish stance since the last rate hike in December. Let's see how this is affecting the bond market. Sorry about that, went the wrong way. Here's the bond market. So yesterday we saw more of a drop than we really had. We were actually dropped about 8 basis points, where on paper it looked like 19 basis points drop. And that's due to what they call a bond rollover. So every month we basically have a reset on pricing on these. So it doesn't affect the rates, the pricing on rate sheets. It does on the calendar look like usually it shows a drop or a little further down, but in reality is it's just a reset because every 30 days they package these up, these mortgage-backed securities, they sell them on Wall Street, and then they reset the pricing and start anew. So, but today we are down about 9 basis points so far. We're reaching the 200-day moving average, our first floor of support. We'll see if we can maintain that or if we can get another little push upwards. As you can see in the stochastic, we're still kind of in this neutral territory a little bit, so we'll kind of see if where we go. So far we're in this kind of almost a sideways pattern a little bit, but kind of a wide sideways pattern, if that makes sense. But we're still kind of within the range here. We've been in for a little over a week right now, or actually longer than that, because if you go back to here, we go back to January, late January. So rates, I would say, probably did worsen a little bit because yesterday we were down about 8 and we're down about 9 today. So that does translate to a little worse pricing than what we've seen. And then treasuries are kind of working their way back up here towards their 25-day moving average as well. So so that's creating a little bit more pressure. It's right now about 2.68 on the 10-year right now. All right, so again, rates are a little bit off today, a little bit worse than they were yesterday. We'll see if that trend continues. If we keep getting good news, stock market taking off, we'll probably see the mortgage-backed securities worsen a little bit further as that money will be moving from the from the mortgage-backed securities into the stock market. But if they're not happy, that money will leave the equity markets, come back in. It'll help interest rates improve. Go in there. But if anything changes, I'll post on Twitter, so you can follow me at Mike Bjork on Twitter if you want to get any of the updates or any other information on there. You guys have a great rest of your day. Thanks so much for watching. We'll catch you guys tomorrow. Bye-bye.